Is joining us right now. Simon Leopold, Raymond James data infrastructure analyst. It's good to have you on the show for our MVP, which we're bringing back again. 184 is the price target. How's it going to get there?
Yeah, so I'm not necessarily calling the bottom today, but certainly feel like we're a lot closer to a bottom for a stock like this. And so when growth stocks come back into favor, which they inevitably will, we're arguing that you want to find quality names that are share gainers with good, solid, improving fundamentals. And so I wanted to pick something that had the opportunity to be such a play, and I think it's Snowflake.
I mean, there is going to be more scrutiny around growth stocks in general, even when they do come back into favor, especially around valuations. You're making the case that this will differentiate itself? So even if there is more scrutiny around the names, the cream rises to the top, and this happens to be in that boat?
Absolutely. And I think the key point I'd emphasize, right, is you can't pro forma cash. You can't fake cash. You can pro forma earnings. You can exclude things from what you count, but cash is real and substantive. And Snowflake started generating cash last year. We have them generating roughly $750 million in the next fiscal year. This fiscal year, well over $300 million, and approaching probably $2 billion in free cash flow in their long-term model. Basically, that's fiscal 29. But just looking at the near term, they are generating cash right now.
Yeah, I can't even look ahead to fiscal 29. You're looking calendar year 25 that they can do $1 billion in free cash flow, and that they can do a sales growth of 50%, a 50% CAGR over the next 3 years?
Yes, and we're coming off of 100% growth last year. So this is in the phase of maturing from triple-digit growth to double-digit growth, but there's absolutely nothing to be embarrassed about growing 50, 60%. This is a company that's playing in a massive market that is public cloud, and their market share relative to the giants is sub 2%. So there's a ton of runway.
What about recession, enterprise spend slowdown, things like that, which are obvious risks to the story?
Yes, absolutely obvious risks. Now, one question that's totally fair to ask here, but this company's never been tested through a recession. They began as an entity in 2012. They came out of stealth mode in 2014. So we don't have the 2008, 2009 period to reflect on. What I would say is management has acknowledged the risk because their business model is consumption-based. So if their customers, enterprises, have slowing businesses, they may consume less. So that's a risk. Let me give you an alternative scenario for consideration. Companies like Snowflake in the public cloud are helping their customers be more efficient, to exploit data, the lifeblood of being a more efficient enterprise, selling more, understanding your customers, understanding your supply chain better. So to a degree, a tough market, a tough environment may actually encourage customers to use Snowflake more. So I could see either scenario playing out. I certainly think we need to be attuned to the potential that a recession could challenge their business, but the long-run narrative is intact.
Yeah, well, Slootman, the CEO, I mean, he's captained a bunch of ships through turbulent waters before, so we'll see. Certainly has the experience that you would look for. I appreciate your time, Simon. Thanks so much. That's Simon Leopold.